Good evening, everybody. Welcome to this webinar about Business Central. Today, we're going to be talking about posting groups and how they work, the different types of posting groups, how to correctly configure posting groups for your clients, and common mistakes that sometimes consultants make when when we configure and work on posting groups for our clients. As I said before, the meeting will be recorded, so feel free to ask questions, to keep your camera off if you don't want your your video to show on the recording. As usual, I will hide your names in the recording, so it will take me a day or two to fix the video, to eliminate any personal details about the attendees before I can share the video with those who signed up. So without further ado, let's get started. Right, so hopefully you can see my screen, because I should be sharing my my slide. I can see that I'm sharing it, so give me a thumb up. You can do that on top of Teams if you can see it. Excellent. Lavinia, very good. Excellent. Thank you very much. Right. So posting groups in Business Central. As I said earlier, we're going to be talking about posting groups, the purpose of posting groups in Business Central, which is often misunderstood. The three different types of posting groups, their relationship to the general ledger, how they link to it, and how to configure the posting groups for your clients, and common mistakes. We will also work live in Business Central with a few examples today. So a bit about myself. My name is Alfredo. My surname is pronounced Iorio. I'm originally from Italy, but I've been in the UK for the last 12 years. And if you don't pronounce my surname, it's perfectly fine. I sometimes also find it difficult to pronounce sometimes. So I'm a Microsoft certified consultant and certified trainer. I have a few credentials that you can see here: Microsoft Dynamics Business Central, Azure, CRM, ERP Fundamentals, Power Platform. I'm working on other credentials. I work as a lead solution architect for a Microsoft partner, primarily working in the UK and Europe, but I occasionally work on projects in the US and in Asia, because the partner I'm working at the moment, I'm working with at the moment, has got offices across the globe. I am also the founder of a Microsoft training partner, and we work with Microsoft partners and end users, and we help them get certified. You might have noticed some of my courses in my website and on LinkedIn. But enough about me. Let's get started with ghost posting groups. So before we can learn posting groups, how to use them, how to configure them, we need to learn what posting groups are not. Because there is a bit of misunderstanding here, which I noticed when I work on projects. So let's start with what posting groups are not. So posting groups are not categories for analysis and reports. Sometimes I hear consultants go through training sessions, for example, with clients, because I often also support and teach younger consultants when I work on projects. And I often hear this sentence: well, posting groups are categories, right? You can group and categorize your customers and vendors using custom posting groups. You can categorize your items. Posting groups are not categories. And I will show you why. There is a very it's a clear explanation for that. Although they sound like categories, they are not categories, and they are not, of course, for analysis and reports. Posting groups are not tags to segregate data for operations. So, for example, item types for stock counts, right? Or customer types for credit control. The misunderstanding and the confusion comes because the Cronus sample data that we have when we work on a sandbox tend to let's say, lead to this misunderstanding, right? We have item posting groups, inventory posting groups, retail, resale, right? Raw material, and some people in supply chain management, users working in supply chain management, warehouse managers say, oh, right, a posting group, retail, finished goods, raw material. Well, I can use posting groups so that I can run my stock count or inventory valuation report looking at the inventory posting group. That doesn't work, right? So the data that we use in Kronos when we train, and we also do, I use Kronos every day because I want to, learn something new, for example, or set up a sandbox for my client. The data is misleading. So not categories for analysis reports, not tag for operations or credit control. So the purpose of posting groups then, the real nature, the real reason why posting groups exists are essentially for finance and accounting only. So posting groups essentially link subledgers with the general ledger, linking subledger to the general ledger. So if you start a new project and it's the first time that the finance manager, financial controller, accounts payable, accounts receivable team see Business Central, and you need to talk about posting groups for setup a configuration, regardless of their industry, regardless of the software that they used in the past. They use Sage, Xero, SAP. What are posting groups? The best and the simplest way to explain it to anyone in finance and accounting, again, regardless of the industry, is this: posting groups map subledgers and then the general ledgers. When we talk about subledgers is an accounting terminology, right? So accounting word is an accounting, again, it's accounting terminology that describes a subsidiary ledger. What is a subsidiary ledger in Business Central? Item ledger entries, customer ledger entries, vendor ledger entries, bank account ledger entries, capacity ledger entries. Those are all ledgers that store information about transactions without posting straight to the general ledger, right? If you post a journal for an expense, no subledgers, straight to the general ledger, right? If you purchase an item, subledger, item ledger entry. The simplest way to explain it to your team and to your client, and everybody will understand. So the purpose of the posting group is, again, to map, right? It's a mapping tool to ensure data accurately flows from operations to finance. I purchase an item, the value of the item flows to my balance sheet, right? I sell a service, revenue reflected, right? I apply an invoice discount is posted to a dedicated account, right? The purpose is that so the management reports are accurate. An invoice for £10,000, revenue for £10,000. If it's 10,000 plus 2,000 tax, 10,000 in one place, 2,000 in another place. The simplest explanation for that. If you speak using this terminology, your clients will understand 100% of the time, regardless of the industry, regardless of the software that they use. And it will make you save a lot of time. So why do some consultants get it wrong? And I used to get it wrong also years ago, before I had the opportunity to learn finance and accounting with a senior consultant, and then who spent a lot of time with me and taught me how to work with financial and accounting data. Most consultants get it wrong because the sample data in Kronos is misleading. Look at this example: inventory posting group, finished item, raw material, resales item. Users and consultants think that they can use to group operations, right? There we go. Inventory posting group, finished items. My finished items are in one area of my warehouse. My raw materials are in another area of my warehouse, right? And now I want to run a stock count, and I can use inventory posting group for that. And before you know, you end up with 50 posting groups, right? Well, actually, you might only need 2, right? So you can think that you can use that for this purpose, and sometimes as you start configuring the system, you might get to a certain point. The problem starts when they start user acceptance testing. And I cannot really run this report. I cannot really run that page using posting groups. And then what happens? You either go back to the original specifications or change requests, right? Development, add the new field, add more logic, right? Before you know, you end up overcomplicating the configuration just because at the start you used posting groups for the wrong reason. The data in Cronus, the sample data in Cronus is also misleading because there is some duplication of data. You can see there is a customer posting group here. And by the way, this is a US company, which you can understand that having a domestic customer and EU customers for customer posting groups doesn't make sense in a US company, because why would you segregate the balance sheet in terms of accounts receivable by customer type? Right, it's a duplication, right? You might want domestic and EU for tax purposes, not for customer posting groups. We will see that in a moment, right? So duplication of sample data. This is a copy of the VAT posting groups in this region, tax posting group in the US, in America, right? Right, so data is misleading, but also posting groups don't work for reporting, right? You might think that you might want to use it, but really, this is an example. You're looking at 4 transactions, 4 lines, 4 entries in my general ledger for 1 invoice, and it's the same invoice. And notice how the posting groups don't tag all transactions linked to the document. And so if you end up trying to generate a revenue report, cost of goods sold report based on posting groups, you will end up creating reports that don't tell the truth because you miss data. You will miss the data, right? If you need to give your clients tools so they can run analysis report on any kind of financial data, the best way and the best tool is to use dimensions. Use dimensions, so you can see here, department code is my dimension, customer group is my dimensions, tag all the entries, customer business posting groups and product posting groups, tag only the main line. So it's not reliable and it's not really the best use of it. So now that we have cleared what posting groups are not, and what their purpose, in a way that we can communicate it with the client in the best possible way, let's look at the 3 types. I am using terminology here that you will find in the MB800, the Microsoft Dynamics Functional Consultant Associate for Business Central credential. If you're planning to get that certification, we also have a training course, but this is not about my course. You will find this terminology in that course. So Microsoft separates the posting groups into essentially 3 types. We have general posting groups, which is the first type. The general posting group is about the transactions, sales, purchase, customers and vendors, but it's the actual transactions. We have 2 general posting groups: the business, which identifies why the transaction occurs. Again, this is terminology that your client will understand firsthand. Why the transaction occurs. In a way, it's almost like a reason code for transactions, because again, the why we do the transaction results in, if it's a sales transaction, where the revenue goes. If it's a sales transaction with the discount goes, right? If it's a purchase, when the expense goes, right? Again, it's why we do business. And so, well, no specific reason, it's just a normal sale. Perfect, revenues, right? It's very easy to identify. Then we have the general product posting group that identifies what is sold or purchased. Again, very simple way to describe it. What is sold or purchased combined with why we sell or buy determines where the value will hit the ledger, which ledger is going to be used by the transaction, and therefore the posting setup that looks at the combination of business posting group, why we do business, or who we do business with, right, and the product. So this is the first type, the general type, right? So you can see here, how do we use it? Where we use it? Well, we use it for revenues, cost of sales, purchases, right? And capacity costs related to manufacturing. But I don't want to introduce manufacturing here because that requires a separate section, because manufacturing and manufacturing accounting, cost accounting, inventory costing, that is requires a separate section because it's rather complex. But probably it's going to be the next one that I'm going to run. So keep an eye on the future announcements, because the inventory costing is going to be the next one. So here is the thing. You can see the general posting groups can have default values on customers and vendors and items, but really the reason why it exists is to tag the transactions. And here you can see an example of a sales order when we have the general business posting group domestic, which is on the line, but also on the invoice details, and we have the general product posting group on the document line. So the combination of these two, why we do business with, right? It's in this case, again, it's domestic, but again, as I said, this is Kronos data, which might be misleading, and a retail product. The value of this transaction will hit my revenue account. So you can clearly see here that the actual general ledger that is going to be used in this case is for the general posting stays in the general posting setup, where we have the combination of the two. So the posting groups link to the transactions to the GL via two options, 2 pages. The posting setup pages for posting groups that require a combination of the two, and the posting groups pages for those that don't. We'll see that in a moment. Here is a good example of what we're going to talk in a minute. This setup comes from Kronos setup. It's something that I would never use for a client. Never. And I'll tell you what. I'll tell you why. Because if the sales account is the same, right? Sales credit memo account is the same, you don't need that differentiation, right? Because as I said before, the purpose is to link transactions to the general ledger. If there is no difference between a sale for a domestic or an export customer, whether they're buying retail or services, the revenue, retail or raw material, for whatever reason I want to sell raw material, and they hit the same ledger, in this case is 40140, there is no need to create more posting groups. In this case, the only difference here is with services. That goes to 40440. So I only need 2 combinations of posting groups for this client. We simplify it and we go live with no issues, right? I will show you that in a moment. So the next one is the specific posting groups. Again, this is terminology that you don't find in Business Central. You cannot key in, search for specific posting groups. You will get nothing. But if you're trying to pass the exam, the MB800, you will get a question about specific posting groups. And we say, well, what is that? I don't see it in Business Central. Well, specific posting groups in Business Central are inventory posting groups, customers and vendors, bank accounts, tax. They're all specific. Microsoft calls them specific posting groups because they are not related to the transaction, but they are related to the entity that we transact with. Right? So like general business posting group is about the sales. The customer posting group is about that customer. So specific posting groups are for reconciliation purposes. Inventory posting groups reconcile inventory with a balance sheet. And as I said before, the subledger. What is a subledger? Inventory, item ledger entries. So as I said before, I repeat myself, but it's very important. If you use this terminology with a finance manager, someone who knows how to use an accounting software, maybe another ERP, they will get it immediately because it's common terminology. Customers and vendors posting groups are specific posting groups. They reconcile invoices amount for credit control, accounts receivable, accounts payable, credit memos, payments, applications, and rounding, because mostly this part is about balance sheet. The exception is that sometimes the application of payments to invoices for vendors and customers results in a gain and loss because of invoice rounding, because of payment tolerance, because of foreign exchange rate differences between the payment and the invoice. So it can also be rounding. We have bank accounts, posting groups. There are for payments reconciliations, cash in the balance sheet, right? Cash in bank. And then we have the tax or VAT posting groups. Depending on the region where you operate, you might have different terminology for the two. But essentially, because Business Central comes from NAV, like NAV and Navision first, and Navision was designed in Europe, Denmark, if I'm not mistaken, the main ledger for tax ledger, it's called VAT. And so you will see VAT posting set up and VAT posting group in a US localization too. Although VAT doesn't exist in the US, it uses taxes. But again, the posting groups are pretty much the same. So how to correctly configure posting groups for your clients? Again, we will look at Business Central in a moment. These are my main rules when I work with new clients, when I teach junior consultants when working on new projects on Business Central. The first rule is avoid duplication, because when you duplicate posting groups for the setup, you introduce so much complexity and clients can get overwhelmed, and it's easy to set one combination of posting groups wrong. It's so easy to do that. And then once you start posting to the wrong ledger, it's a nightmare, right? To reconcile your numbers. So avoid duplication. If you need to hit one general ledger only, accounts payable, accounts receivable, revenues, right? Inventory, cash at bank. If it's one ledger, use one posting group. There is no reason to duplicate, to have a customers and domestic customers, EU customers, if you want the transactions to hit the same ledger, because there's no other benefit of doing that. So avoid duplication. It will make your life easier and it will make your client life easier. Anticipate users' mistakes. So expect users to make mistakes, particularly when you start working on a new implementation. And it's normal, right? New software, a lot to learn, right? The client is going to go live with a new software and they're just learning new stuff. So expect people to make a mistake, block a combination. You know that certain combinations should not really be allowed, and Business Central allows you to have, that one blocked, particularly the combination where posting groups are blank. So you avoid having transactions hitting the ledger without a posting group, which might result in issues, particularly with VAT and tax posting groups. Lastly, probably one of the most important, at least for me, work with the client auditor if they work with an auditor, the CFO, right, the finance manager, because really you can advise your client about posting groups, but ultimately mapping subledgers and transactions to a general ledger, it's the job of the finance manager, the auditor, the chief financial officer. They need to do that kind of job. You teach them, right? You coach them, you support them, you can help them with a basic setup, but they really need to do that. And of course, last, but some seems obvious, right? But I put it here because I believe it's important. The chart of accounts comes before the posting groups. You cannot work out the posting groups without chart of accounts, because the chart of accounts drives everything, right? If the chart of accounts has got 3 revenue accounts, and the chief financial officer, the finance manager, tells me, well, if we sell item A, we want to hit this general ledger. If you sell item type B, that ledger, item type C, this ledger, regardless of the customers. But then you need 1 general business posting group and 3 general product posting groups. That's it, right? So chart of accounts before the posting groups. So common mistakes to avoid, and I've been guilty of those mistakes many, many times, particularly the first 4 or 5 years in my career, where my focus was primarily on operations. I used to be the warehouse management guy, the operations consultant, the supply chain consultant, but I just ignored all the finance part of it. Then I understood that if I really wanted to take my career to the next level, I had to get a basic understanding of finance and accounting. I'm not an accountant by trade. I will never be one, but I'm comfortable now with accounting. If you want to be a good consultant, you must have a basic for that. So, common mistakes to avoid: address posting groups early in the analysis phase, right? These are configuration details that you need to complete the setup, and your client need that. When they go through user acceptance testing, they need to find a fully configured sandbox, and configuration means chart of accounts and posting groups. Address these requirements early. My preferred way to do that is that the first analysis workshop that I run with a client, it's about the general ledger, right? Finance is the first one. This is how I like to work, but you might want to use a different approach, which is okay. When you talk about finance, you need to look at the posting groups. If you talk about sales or purchase first, try to include some accounts payable, accounts receivable, address it early. And then use business terminology. This is always a good idea, particularly in the first phases of a project, right? Business terminology before business central terminology. The biggest mistake you can make is start a new project and say, well, we need to talk about posting groups. What are posting groups? I will tell you next week when we meet. The client's got no idea. They cannot invite the right people in the meeting, right? And they are overwhelmed. It's a new system. And here I got an agenda that talks about 50 things, and I don't understand half of them. Think about it. You don't want to be in that position, right? So use business terminology early on in the project. We need to talk about mapping the sub-ledgers to the general ledger. The finance director says, I'm coming because that's very important. I'm going to take care of it. We cannot get it that wrong. And you will see that a simple sentence put in that way will change the attitude of your client completely. So we need to talk about sub-ledgers and general ledgers. In Business Central, these are called posting groups. Right, no problem. Right, so that is really what's going to make a massive difference. Right, 30 minutes, halfway through our meeting. It's time to look at, it's not really a demo because I will show you, we will go through the actual posting groups, but I will show you how to, my way essentially to set them up, and a bit about the all the little fields and combinations that are a bit obscure sometimes. Again, Cronus doesn't really help here, unfortunately. In some cases, it's plain wrong. I will show you a couple of examples today. So let me change my screen, and there we go. Now I'm sharing my sandbox. I'm using a US sandbox, but what I'm going to show you today, it applies to any sandbox, right? It doesn't differentiate between US or Great Britain. The terminology might be slightly different, but the architecture, the core concepts are exactly the same. So let's start with general posting setup, where we find the combination of business posting groups and product posting groups. So what do we see here in this Crohn's database? We see the duplication issue that I mentioned before. We also have a general business posting group called warehouse, and I will show you why that happened. That I have it there because you might remember in one of the first slides, I said that general business posting group, it's about why we transact. I didn't say who we transact with, right? Because you might say, well, general business posting group is customers and vendors. Well, what does it mean here? I'll show you that in a moment. Think about general business posting group as a reason code for transactions, and your understanding, your client understanding will change. So here is an example. We have a few combinations with no general business posting groups that are related to item transactions, item journals, for example, manufacturing, where the general business posting group can be blank. And so it's here, it's blank. But I'm not going to talk about manufacturing here because I want to talk about this part here. This is a very good example. Look, if I filter by on retail, you might notice that the combination of retail and domestic and retail and export for sales is the same account. It's the same for credit memo. It's the same for line discount. When I apply a discount to the line, when I have the sales invoice discount account, when I essentially discount an entire invoice for the client, this is the ledger that is going to get hit here. These are all income statement accounts. So if I scroll through cost of goods sold, right, when I ship and when I items and when I invoice them, this is the cost of goods sold account. This is the direct cost applied on items. We'll talk about that in a moment. But before we dive deeper into the use of these accounts, the purpose of these accounts, you might have noticed one thing. There is no difference in any of the posting of the accounts or general ledger accounts that will be used by when we post transactions for retail items, whether we use domestic customers or export customers. Same applies to purchases. We purchase retail products from domestic vendors or export vendors, regardless, right, of the business posting groups of vendors and customers, the same ledgers will be hit. So what does it mean? It means that there is no practical reason to have two posting groups. It's a waste of data. It's an additional setup and configuration line that you need to apply. And a user making a mistake means that my revenues, any financial analysis on revenues, on costs, will be very complicated. So this is an example of what not to do. Data duplication, right? So why do I have a warehouse general business posting group with a retail product posting group? Do I have customers or vendors with a warehouse posting group? It doesn't make sense, right? What does it even mean? Remember what I said before, general business posting group is not too much about who we sell or buy, we sell to or buy from. General business posting group is more about why, right? A reason code. And so the reason why we do the transaction applies to my income statement. And that's why we have this, an inventory adjustment account on the general posting setup. And you might have noticed that there is one inventory adjustment account on retail with no business posting group, but there is a different inventory adjustment account with a combination of warehouse and retail. And let me show you how they work. If I try to get an item journal for a retail item and I want to do a positive adjustment, and this is something that I showed the general business posting group doesn't show by default on the item journal. I just added through personalization, but it's just hidden, right? I didn't do anything to the system, right? Let me see if I can find the item, which is retail, right? Let me see if I can find advanced view. I can find a retail item. Inventory, there we go, London. Let me see if I have this one. To edit. London Pine window. There we go. Yes, London Pine window, it's retail. Okay, so retail item. I'm going to choose London Pine window, which is a retail item. I'm not going to use a location because I don't care. So I'm going to have an inventory adjustment of 20 of these Pine windows, and they cost, I don't know, $50 each. If I try to post this journal, 2 entries will hit my ledger, right? I am adding inventory because it's a positive adjustment, and it goes to my finished goods. The mapping of the subledger to a general ledger, you can see that in action, right? Also, why posting groups are not for reporting. This line is based on the inventory posting group, the specific. This line is based on the general posting group. So the same transactions, two entries, 2 different posting groups. If you're trying to generate a report using posting groups, the reports will never make sense. Anyway, so you can see that why posting groups are not good for reporting live in action. But the mapping now is what I want to show you. Notice how the inventory, the nominal ledger that gets credited by this transaction, it's account 50110. Why is it so? 50110 because the inventory adjustment account for retail and no business posting group is 50110. The posting group as the reason code, the why we do business, why we transact. The warehouse, general business posting group, and retail allow me to have a warehouse adjustment, which I mistyped because I was preparing this one. You can see I mistyped. But anyway, you can hopefully you can see what I was trying to do. I have a dedicated warehouse adjustment in my income statement, which is not the usual cost of material. So now, if I go back to my item journal, and this time, instead of using a reason code that does nothing to my ledger, I choose a general business posting group of type warehouse adjustment. And now I'm using the general business posting group for what it's essentially designed to do, right? Apply logic about the transaction so that the value of my subledger transaction, item ledger entries, will post to the right ledger. And now I have the warehouse adjustment in my income statement, right? The finished item still goes to finished goods because, again, it's a positive adjustment, but the value of the adjustment goes to a separate ledger. And you can see with an example, right, how this combinations work. So does it make sense to have a domestic and EU general business posting group on customers on general business posting? Does it make sense? Not really, unless you want to segregate your revenues and costs by the region, right? You might argue, well, Alfredo, you know what? The general business posting group it's also linked to default VAT business posting groups. And so you can see domestic, EU, and export, and you can see how to insert default. But again, this is Kronos data, which is a nice way to show what you could do, right? However, if I am careful about my setup and configuration and data migration, customers and vendors should have the right VAT or taxed posting group on their cards, which means this is what I should be doing, right? There we go, right? Excellent. Now, this is the right thing to do. This is the perfect way to do it. I don't enable duplication. The VAT posting groups, there we go, VAT posting groups, VAT business and VAT product posting group exists. You can see domestic and foreign for VAT business posting group. And then we have the VAT product posting groups, resale services. You can see the data was incorrect, but again, this is in a US Kronos database. The data is even worse than what you will find in a UK database, particularly for VAT, because again, VAT is not in use. But again, the logic is essentially the same, right? Here you can see domestic and foreign. So if I go to my customer cards, for example, and I find domestic customers, the domestic customers for VAT purposes will have its own VAT. It doesn't show here because again, this is the US, US, but you can see having domestic for these two really doesn't make any sense because the differentiation is for tax purposes. Okay, so this is an example of the why for general posting group. So quickly, for the last for the remaining minutes that we have, let's go through the common let's say setup and the more, let's say, advanced setup that you might want to use. And you'll find, unfortunately, there's no enough content in the if you search the Microsoft Learn website. So general posting setup. So sales accounts, credit memo, sales discounts are quite explanatory, right? A sales credit memo. This is where the revenue and of course the credit goes. This is not about the credit control. It's actually revenue accounts. Sales line discounts and sales invoice discounts are only used if on the general ledger setup you enable in invoice posting. Oops, sorry, my mistake. I think it was sales and receivable setup. There we go. So if you enable all discounts, you need to get the discounts, right? If you only enable the invoice discount, the line discount will not be used, so you don't need it, okay? And if you have the no discount at all, no discounts at all, these two columns are not really used because what you end up with the net amount hitting your revenues. The discount will just not be posted, okay? Payment discount, credit and debit, it's the gains and loss. If you grant your customers or vendors, in this case, sorry, not vendors, this is sales, so customers, if you give them a discount, right, on payments, usually it's when they when you use payment terms. Let me show you here. Payment terms, and you have a discount calculation on payments, right? So if you pay me 8 days after the invoice, you will get 2% discount. If you pay me when the invoice is due, so after 8 days, but before the invoice is due, you will get no discount. So the payment discount is linked to the payment terms. Payment discount, debit and credit, and this is sales payment total, because you can have a payment discount on the actual lines or on the invoice total. Then we have sales prepayments account when you issue a prepayment invoice, when you post the prepayment invoice. So if you go to a sales order, for example, right, and we look at a sales order, prepayments are not available on sales invoices, right? And you look at the prepayments here. If I have a 10% prepayment, it will update the prepayment lines. And let's say we have an issue with tax calculations here, because again, it's a Kronos sandbox. But anyway, if I had the prepayment discount, so prepayment percentage here, what I have to do then later are going to have to posting, prepayment, post the prepayment invoice. The prepayment amount calculated as a percentage of the total line, because it can be by line, right, will be essentially used by the sales prepayment account. This is the part about sales and revenue. The rest is about the purchases, right? Purchase accounts and purchase credit memos. These work with inventory items where the posting is a bit complicated. But in essence, when you purchase inventory in Business Central, you have double the amount of entries in your general ledger, because that's how it works. But again, as I said, I'm going to explain more in the next webinar, where I will cover inventory posting and inventory costing. Essentially, a purchase account in Business Central, it's what nets off and balances out essentially accounts payable. Right, so we purchase from a vendor, let's say domestic vendor in this case, even though, as I said, I don't like it. I don't like domestic. We purchase from a domestic vendor and we purchase a retail item, right? It's $10,000 of invoice, $10,000 that we need to pay to the supplier, $10,000 that goes to my purchase account. Then we have the inventory, £10,000 worth of inventory that goes to my balance sheet, because inventory value when it's received, inventory is balanced by direct cost applied account. If we use overheads for inventory, we also have overheads. Here is another example of something that must never happen. So we have a direct cost applied account and an overhead applied account going to the same ledger. No organization that manages inventory will ever do that, because it will be very difficult to reconcile invoice receipts. And by the way, another mistake, you can see that direct cost applied point to a balance sheet account, goods for resale. Direct cost applied is a cost of sales account. It's an income statement account, at least according to IFRS, which are international financial regulatory. I don't remember exactly how it's called, but anyway, financial, let's say, compliance, rules, framework. Sorry, compliance framework for finance and accounting in this part of the world. In the US, we have GAAP, GWAP. I am confident that in US GAAP, direct cost applied should not be a balance sheet account. So another example, posting groups and posting setups in Kronos are sometimes just wrong. And you cannot use them as a reference point for your clients, unfortunately, right? The next part that I want to talk about is cost of goods sold account, which is the cost of sales of items that are shipped and invoiced. In Business Central, we also have inventory interim and cost of sales inventory, interim, because Business Central can post to interim accounts inventory movements if we enable on the inventory setup if we enable expected cost post into the GL. Expected cost post into the GL is best described as goods received not invoiced on purchases and goods shipped not invoiced on sales. All part of the general posting setup, right? Again, more on inventory on the on another training. And lastly, the contracts specific general posting setup options. And these 4 columns are related to the subscription billing module, right? When we post amounts for customer contracts and deferrals, vendor contract and vendor deferrals for revenue and expenses recognition on contracts. Again, a bit more advanced. It's a bit complicated, that module, but again, I will share more very soon. Quickly, customer posting setup and vendor posting, sorry, not posting setup, customer posting group. Customer posting groups and vendor posting groups. Now we're talking about the specific, right, posting groups. And here you can see an example that I just created before. And there we go. This is something which is extremely unlikely in my experience, extremely unlikely. I've never worked with a client, and I started working in this world about 12 years ago, never worked with a client who required different receivable accounts for, again, accounts receivables based on their customer type or category. The only exception to this rule is intercompany customers. So customers and vendors that are part of the same group, usually the organization's payables and receivable team, they want to see the intercompany payables and receivable balance in a separate account. However, in that case, what are we going to do? We're going to look at intercompany partners, right? And so intercompany partners, my intercompany information is still set up. You can see that here we have the intercompany payables and receivable account. So each intercompany partner, customers or vendors, right, will have its own receivables and payables accounts in the intercompany setup. So unless you need to set up intercompany customers and vendors without enabling intercompany transactions, in that case, you will need something like this, EC, intercompany customers, and now you have an intercompany receivable account here. But again, you're not using intercompany partners, right? You're using a dedicated receivable account. Same for vendors, right? It's the same thing. So receivable accounts, again, accounts receivable, service charge, if we charge them, right? Payment discounts. In this case, you can see, except for this column, everything else, which is, of course, sorry, except for this column, which is a balance sheet account, accounts receivable, domestic accounts receivable foreign. Again, I've never seen that. The rest are pretty much income statement accounts because it's about gains and losses, payment discount, debit, payment discounts, credit, right? Interest account, we charge interest for late payments, reminders. We have additional processing fee. It goes here. Invoice rounding account, we will run the invoice for this client, right? Whenever we have, again, post transactions for customers, maybe the invoice lines are 5 digits, the invoice header total is 2 digits. What happens when we round it? We run the invoice. Debit currency application, rounding account, debit and credit. Again, I am applying a payment in a foreign currency to an invoice. The application results in rounding gains or losses. Here is where we defined where we make or lose money. Therefore, income statement. See here, right? Debit currency application rounding, again, so for foreign currency. Debit rounding account, this is about when you give your client, again, rounding for the application for remaining amount in the same currency. And here you have the payment tolerance. So these two are also, there's four actually, sales, sales and receivable account set up when you have the, no, not here, it's on general posting setup, general ledger setup, sorry. General ledger setup. On the general ledger setup, there we go. You can see application rounding precision. If it's about the, if it's within the application rounding, this is not about the currency, right? Foreign currency, it's about the local currency, right? If it's within the application rounding, there we go. The difference will post there. If we have a payment discount tolerance, payment discount is about the grace period of the payment terms, right? As I said before, right? We have 8 days here, 2% discount. If I give my client a 1-day grace period, the 2% will still be calculated, but instead of going to the normal payment discount account, it will go to a payment tolerance posting with the grace period saying 1 day. It's global setup. It doesn't apply to specific customers. If I change it, the system tells me, do you want to change it on all open entries? Open entries means invoices which are not yet fully paid. So Business Central will store the information about the grace period for payment discounts, right? And so 1 day after the payment discount was supposed to be given, the client can still pay. The payment will go to that specific account. We have the payment tolerance, which is again set up at global level. And so the payment tolerance, if I go back here, right now we have the two. Right, so the same applies to customers. Inventory posting setup works in that pretty much like what I showed you before, with the combination of location this time and inventory posting group code. Right, this is how the Business Central is set up. Here you can see an example in my Chronos database. They're used for many things: training, video recording videos, and different demos. And so you can see the setup is quite chaotic, but you can clearly see the same issue here, the duplication. Now, in this case, the duplication sometimes is inevitable because if we work with multiple locations, there are no other options. Right, and so we just need to duplicate that. And so you can see my resale items. There we go. If I filter this value, my resale item all point to essentially to pretty much the same inventory count, with a couple of exceptions. Again, just for testing and training purposes. This is again a kind of duplication that you cannot avoid, because if your client needs 20 locations, well, you need to duplicate that. There's no way around. But it's the only example where duplication is okay. Inventory account is balance sheet. Receive items will debit this account. Shipping items will credit this account. Inventory interim, again, expected cost posting, goods received not invoiced. And here it's all about manufacturing, which is again goes, it's not really included in today's session. We require another session about manufacturing, costing, and inventory, maybe two, one for inventory costing and one for manufacturing, which is a huge topic. All right, so 1 hour on the clock now, and we pretty much, we're done. And so if you have any question, you can send me a message here, or I can stay online for a few more minutes if you want to raise a question. You can raise your hand and we'll unmute you. I need to unmute you, unfortunately. That's the setup at the moment. But again, 23 people still online, which is amazing. You've all been connected until the end, which means that you found it beneficial. Again, I'm going to leave it here for a few seconds. If you have any question, raise your hand, it will unmute you, or write a comment in the chat. Lucy, clapping your hands, thank you very much. It means that you find it beneficial and valuable. That really, it's very important to me. There we go. Great session. Thank you very much, sir. I really appreciate that. Hisham, sorry, I assume you're a Sir Hisham. But I shouldn't make these assumptions anymore. Right? We live in times where we shouldn't make these assumptions any longer. But anyway, I don't want to digress here now. There we go. Do we have a separate question? Let me see. Maybe a question is coming. And there we go. If we use non-inventory for service items, do we need cost of goods sold account set up? No. Non-inventory items don't post to cost of goods sold. And so you don't need it. Exactly. So Mohammed, you answer the question. Thank you for that. You can see also, confirm that. So do we have separate general ledger for inventory interim account for sales and purchase separately? Inventory interim account for sales is cost of goods sold interim, which should be a cost of goods sold. It could be it should be the an income statement, while inventory interim account for purchase is an asset, right? And it's a balance sheet account. So yes, Mohammed, you need general ledgers for inventory interim account and cost of goods sold account, and then needs to be separate, right? Because again, from an accounting point of view, inventory that you purchase but you have not invoiced yet, it's sits in your balance sheet. Inventory that you have shipped but you haven't invoiced your customers yet, it's a cost of goods sold interim, it's an income statement. So yes, absolutely, they must be separate. Excellent. Thank you very much. It's an hour and 2 minutes, and if there are no other questions, but again, the chat of this meeting will stay open, right? So if you want to post or to write a comment here, feel free to share it. Again, you probably find this meeting an invite on LinkedIn. I'm always very active on LinkedIn. Feel free to send me a message to my profile. You got my email now because you should have received an invite. Right, Mohammed, thanks for your effort to put. Thank you very much, sir. Really appreciate that. So, Cesar, what is the difference between service and non-inventory product? Lani, you said everybody's fine. Thank you very much, Lani. Cesar, I don't know how to pronounce it, but anyway, the difference between service and non-inventory products. For finance and accounting purposes, non-inventory and services are the same. In Business Central, non-inventory items create item ledger entries. So you will have your subledger with the physical quantity of the item that you receive and you ship. However, being non-inventory, the physical the item ledger entries will always have a zero remaining amount. So they will never post a balance because remaining amount will always will be disregarded, right? So you have plus 500 items, you receive 500 non-inventory items, your balance inventory will show zero, right? A service item, even better. An item of type service, not to be confused with service items in the service module, which is a completely different thing. An item of type service that does not create subledgers, right? It's just a simple map between the item and the general ledger. Usually, item of type services go by the hours, right? Marketing, training, what we're doing now, right? Service item. Non-inventory is something of low value that you don't need to keep a balance of. You buy the paper for the fax machine, right? Do you need really to know that you have 50 boxes of paper or 5 boxes of paper? When it runs out, you call your supplier, send me 500 cases more, right? 500 cases, 50 cases, right? Whatever. And so you use known inventory. Known inventory are mainly for manufacturing. Nails, screws, right? Small things, wires. You have a bucket, right? Or nails. It doesn't matter if it's 2 million, 3 million, right? Small screws or different sizes. When you're running out of screws and nails or bolts, right? You just buy them, half a ton, and you can consume them in manufacturing, right? A service is something you charge by the hour. Marketing, law firms, consulting time is a service, right? That's it. Right. Anything else I can do for you? Any question you might have? I can see, people are writing. I'm happy to stay online to answer your questions. No problem at all. So let me see who's right. Thank you very much. That Cesar, very happy. Is it easier to use the same general ledger account for purchase account and direct cost applied account? Great question. Great question. I'm sorry, Bertus, if it's probably your second name. I'm not sure I will pronounce your first name correctly, so I hope you don't mind if I use your second name, sir. Sorry, assuming that you are a sir, because I don't understand. I cannot read it from your name, so apologies for that. But going back to your question, great question. It's fine, Bertus, excellent. Yes, purchase accounts and direct cost applied accounts, 95% of the time must be the same account. It's very rare to see the two to be separate. In some organizations, you might have two under the same group, right? So you can say beginning and ending total. And so direct cost applied, usually they should wash, right? So because again, one is the opposite. One purchase balances accounts payables, direct cost applied balances inventory. The only exception where you want them to be separate is when you use overheads applied for inventory on purchases, not on manufacturing. So this is an example. I purchase items from a supplier. The supplier sent me an invoice, $10,000. I receive these items, and when I receive it, my warehouse team needs to repack them or to rework them. And I don't need to use any kind of assembly or production because it's just an agency that unloads my lorry. There we go. That's a good example. But I want to capitalize the time that the team spends to get that stock, which means I apply an overhead of, I don't know, 5%, right? So 5% overhead applied. The invoice for the supplier is still $10,000, right? Because that's what I purchased and that's what I'm going to pay. However, my inventory is going to be valued at 10,000 plus overhead applied. Okay, if it's 5%, right, it's going to be £500. So inventory is valued at 10,500. Direct cost applied 1,500. Accounts payable 10,000. Right? Purchase 10,000. Purchase and accounts payable match at 10,000. Inventory direct cost applied match at 10,500. Technically, inventory plus overhead, because inventory is 10,000 plus overhead, which nets with the opposite sign, right? And direct cost applied 10,500. In that case, you want the two to be separate, so you can see the difference between the two. Overhead applied on purchases is again quite rare, but again, if that's what your client need, purchase account direct cost applied can be separate, right? Great question. I don't get that. Thank you for that, because I don't get that very often. So thank you very much for that. Right. I hope I answered your question. But again, if you want to learn more, thank you so much. Excellent. It's my pleasure. Again, if you want to learn more, I'm happy to talk about that on another session. But anyway, the next training webinar is going to be about inventory costing, standard costing, overheads applied, item charges. We might put item charges in it. So item charges, cost accounting in terms of inventory. That will be fun. That will be a rather advanced, meeting. Let's see if you will respond. Excellent. 10 minutes past the, let's see, over time, but it's not a problem. Thanks. I can see no other questions are coming, so thank you very much, everybody. Pretty much all of you are still online, and it's really a great pleasure to find that you find it beneficial. As I said before, a day or two to clear your names. Can you send your control to the next webinars? I will. Yes, your explanation was fine. Thank you so much, Sajjad Johansson. Thank you. I really appreciate that. Thanks for your feedback. That's wonderful to hear that. I really appreciate. Yes, I will send you an invite because I have your names here that you registered through the Teams meetings. I will send you the invite directly. Plus, I will share it on LinkedIn as usual. So next month, inventory costing, item charges, the ins and outs about inventory valuation, inventory reconciliation, and the accounting and the practical sides of inventory costing. Thank you so much, everybody. Have a great rest of the evening, and I'll see you very soon. Thank you and good night.